Good evening, everyone. Welcome back to Mobile Home Mondays. I am your host, Jasmine Gittens. And as you guys know, I am here to bring you guys tips, strategies, and information that you guys can actually use and implement into your business of growing a mobile home business. As you know, I'm going to just hop into our group, Mobile Home Investing for Newbies on Facebook, tag our group, let them know that we are live so you guys can hop on in because tonight is going to be super special. This is a conversation that we all have talked about, have questions around funding, right? Financing, getting these mobile homes financed. And we have such a special guest. This is someone who a lot of you guys are familiar with. We see their name run across our platforms, our Facebook pages, and everything. So I'm super excited to have our special guest with us tonight. As you guys are rolling in, of course, let us know where you're tuning in from, and if you have any questions, feel free to drop a comment and we will get to them as we are going along. And before we hop into it, I want to remind you guys that we have our Black Friday sale going on right now for our 2-day 100K mobile home boot camp, our 2-day boot camp to help you guys launch and grow your mobile home business. We're going to be talking about strategies around mobile home investing to help you become a six-figure earner as a mobile home investor. And this is 99% off. This class is usually $497 and it is only $5. So I'm going to put the link in the description. You guys hop into that. You want to get access to that. You do not want to miss this. Okay. But without further ado, we're going to invite our guest in here. We have, hello, Mr. Sherman Arnowitz from KeyHole Connect. We are so happy to have you. How are you doing today?
I'm doing fantastic. And thank you so much, Jasmine, for inviting me on. Your enthusiasm is very contagious. It sometimes makes me look in the mirror and feel depressed because you're so enthusiastic. And I love that
Yes.
about you. And you're actually making me feel good about myself. So I
I
appreciate it.
love it. I love it. Well, we are so happy to have you. Honestly, like I said,
Thank
we
you.
see Keyhole Connect on, everywhere, right? I mean, they're on all of our Facebook groups. So if you haven't heard, if you're not familiar, guys, make sure you get familiar. But tonight we're going to get an opportunity to learn more about you guys' company and what exactly you do. So, with that being said, Sherman, I'd love to just kind of learn, your experience and background in financing mobile homes, up until now.
Sure. That'd be great. For 25 years, I've been investing in non-performing residential second mortgages.
Mhm.
And these are mortgages that somebody takes out a first mortgage and then they want to take out a second mortgage. And so these are residential mortgages where at some point the homeowners stop paying their second mortgage.
Mhm.
And so the banks try, and at some point they give up. They would rather sell these loans to companies like myself at discounted rates. So I would buy these loans and we would work with the homeowners, keeping them in their homes, but working out deals with them. And
Mhm.
so it's just been a fabulous ride for 25 years. And I would say the last probably 4 years, we notice more and more people getting into the market and making the supply and demand more difficult to find good loans. And when you would find these good loans, which should be going for 25 or 30 cents on the dollar, is up to 60, 70 cents on the dollar. And you can't
Wow.
really make money.
Wow.
So I'm a big believer in the universe. And all of a sudden, I get a phone call from one of my investors. And he says to me, "Hey, I've invested with you before, and I own 5 mobile home parks. And I'm tired of self financing. I'm tired
Mm.
of coming up with the money. I'm tired of dealing with the borrowers. I'm tired of waiting. I'm tired of being at beck and call. I don't want to do it anymore. I know you have lots of private investors. I think this is just the opportunity for you."
Mm.
And lo and behold, that lightning struck and that little light bulb went up above my head. And I started thinking, and I'm like, yeah, I could do this.
Yeah.
And I knew nothing about mobile homes. I never visited a mobile home park. I think I had the same pretense of what I thought a mobile
Yeah.
home park was like. And it was, it was just something totally new, but I knew I could do the concept. The
Yeah.
concepts were somewhat similar. I love starting with at scratch and then
Mhm.
starting to build up and
Yeah.
learn and build up and create something and challenge people to say, find the loophole, find
Mhm.
something that you think you don't like about this concept. And so it took us about 9 months to really put together a program.
Mhm.
And I think I'm a pretty good entrepreneur, but I don't think I'm the smartest guy in the room.
Mhm.
And what I was finding was I went to my very first seminar in Atlanta, Georgia.
Okay.
And I started walking around and I started talking to people at the booths. And everyone was saying, oh my God, I can't believe you're doing this. Our industry needs this so bad.
Yeah.
And I'm thinking to myself, what did I do? I don't know anything about this industry. All I came up with is the concept
Mhm.
that we could fund borrowers who want to go into a park community
Mhm.
or on private property. But what I realized what was happening, we had competitors, Competition, 21st Mortgage,
Mhm.
Vanderbilt, Triad, but they weren't really competitors, I found out,
Mm.
because their focus was on the prime market, the prime borrowers, the borrowers that had credit scores greater than 660,
Mhm.
the creditors that had impeccable credit references, the creditors that wanted either a new unit or a fairly new unit. If someone went to them and said, my credit score is 640,
Mhm.
they weren't interested in doing business.
Mm.
If someone came to them and said, I have a 1980 mobile home, not interested in doing business.
Mm.
They created, and all the power to them, they created a business model that they wanted to create based on risk and reward, that if you fit that model, they're a great company to work with.
Mhm.
What I found from just luck and stumbling upon it and listening to people was, hey, wait a second. What about these people over here that have a
Mhm.
credit score lower than 660?
Yeah.
That maybe something happened in their lives that caused that credit score to lower. Uh,
Mhm.
Looking for a less expensive unit, maybe an older unit, maybe they don't get paid by a salary, they get paid by cash. So all these different
Mm.
situations that would be coming up, creating the subprime market for the
Yeah.
subprime borrower. I wanted to create an opportunity for those people in that space. And once we had our target of the subprime market,
Mhm.
we then worked around that and created a business opportunity for not only the borrower, but the park owner or the mobile home dealer or the flipper, and also for the investor. So I wanted to create something that was fair and
Yeah.
that everybody could take advantage of this opportunity. So for the borrower, we looked at them and that we said, okay, you come to us, you have a bad credit score, maybe it's under 660. We'll put that on the left-hand side of the paper.
Mhm.
Now let's see about building up the right-hand side of the paper.
Yeah.
And let's look at what we call debt to income ratio.
Yep.
And so if you make $1,000 a week,
Mhm.
making it easy, we're saying your expenses can go up no more than $570.
Okay.
Okay. So that's a 57% debt to income. If
Okay.
it's 570 or less, and I'm just using 1,000 as just an easy
Yeah.
number, could be 2,000, 3,000, whatever it is. If your debt to income ratio is 570 or less, that's fantastic. That's a big fat plus. Now let's look at some other opportunities. How are you doing with your cable bill? How are you doing with your rent? How are you doing with your phone bill, your car
Mhm.
insurance, your car finance? Whatever it is, we have a long list that they can go through.
Right.
If you can prove to us and show us that
Mhm.
you haven't missed the payment on your cable bill, you
Mhm.
haven't been late, you're current and have made all your payments to your landlord, we're going to
Right.
put all that stuff on the right hand side of the paper. And probably 9 times out of 10, the underwriters are going to approve that deal.
Mm.
And that's
Mm.
our job. For the borrowers, we found most of those borrowers in the subprime market. This is the first time that they're having an opportunity to be involved in gaining equity
Yeah.
in their lives.
Yep.
The biggest competitor for us in our space isn't really 21st Mortgage or Vanderbilt. Our biggest competitor are the apartments for rent, because
Mm.
a lot of these borrowers, they're looking, and I'll call them prospects first, they're looking at, hey, I can get a 2-bedroom apartment for $800. Now you're showing me a 2-bedroom, 1 bath, and it's going to be $1,100. And then we explain to them, yes, but let's look at the power of equity. And so
Right.
we go and we discuss that. And because of that experience, and that they've never really had the opportunity of equity and earning equity and appreciation, we hold their hand from start to finish through this process. So they come to us via our website, Facebook, whatever it is. They fill out a intro form to tell us a little bit about themselves. Once we get it, we make that contact. We tell them about our program.
Mhm.
And then the next step, when they're ready, is they fill out a borrower application. That borrower application, when they hit submit, whether it's English or Spanish, goes to our underwriter. Our
Okay.
underwriter then takes over. The underwriter is going to ask them for certain things. It's important, super important, that the prospect gets those items to the underwriter as quickly as possible.
Yeah.
We want to keep that momentum going. And when I talk to and train other flippers, I want them to get involved in qualifying that prospect. We're
Yeah.
going to call them a prospect because they're not a borrower yet. They
Mhm.
have to prove themselves from
Mhm.
prospect to borrower. And so there
Mhm.
are certain things that flipper, that investor can do to pre-qualify to make sure. We have
Yeah.
a list of about 15 questions
Hmm.
that the flipper can go through when they're talking to the prospect and saying, hey, have you ever been involved in a bankruptcy?
Okay.
Have you ever been involved in a foreclosure? Do you have a social security or an ITIN number?
Mhm.
Tell me about work. And so, number one, you're building a relationship with that
Yeah.
person. Number two, you're pre-qualifying them.
Mhm.
So as much as the flipper investor can get and develop with that prospect,
Yeah.
makes the process go faster. And
Yeah.
so it should only take less than 5 days for the underwriter to come up with a decision. As
Okay.
long as that prospect is answering, oh, you need 2 years of this? Okay, great. You need a letter from my landlord? Okay, great. Here it is. We've had literally some prospects be approved within 2 to 3 days from our
Mm.
underwriter because they
Nice.
got it.
Yeah. Yeah.
And so the more that we who contact and communicate, we try to do it on a daily basis, one way or another. Same thing with the flipper. If you can be involved and be that cheerleader and that motivator, it just means the process is going to go a lot smoother and a lot
Mhm.
faster. So once the underwriter approves, we want to make sure that the prospect gets home insurance. That's going to cover the cost.
Yep.
Usually we
Okay.
say if the list price, not the amount you finance. If the list price, if you're going into a park, we say if it's $50,000 list price, the minimum down payment is 10%.
Okay.
So 50,000, 10% is 5,000. That 5,000 you're not giving to us. That 5,000 you're giving to the seller, whether it's
Okay.
a park owner, whether it's a private sale, you're giving that 10% to the seller, and you're financing that balance with us. Okay. And so once that's done, when it comes to home insurance, if it's $50,000, we don't want you to insure it for $50,000. We want you to insure it for at least 20% more. We want you to insure it for 60, 65, maybe even 70,000.
Okay.
The difference that the borrower is going to pay between 50,000 and 65 or 70 on a yearly basis, maybe $20 a year.
Okay. Okay.
The advantage here is that if, God forbid, something happens to that mobile home and it's destroyed, they're going to take, if you only did it for $50,000, they're going to take, the insurance company is only going to take that $50,000. Hey, it's been 3 years. There's been depreciation. I'm not giving you $50,000. I'm only going to give you $35,000. Well, guess what? You're on the hook with me for $50,000, for $45,000. If you went ahead and instead of 50,000 did 65,000 and 3 years goes by and it depreciates and it's at 50,000, okay, you owe me 45,000.
Right.
$5,000 to play around with. That's why we ask it, and it's solely for the benefit of the borrower.
Yeah.
So now they've done the insurance. They've shown us that they have the insurance, that they've listed us as the lien holder. We have 2 documents. Actually, just one document with the borrower that's signed. It's just the mobile home agreement, and the mobile home agreement, digitally signed. It just lists out everything that we talked about. You're going to pay starting December 1st. You're going to pay $820 for 10 years, and you're going to sign up for our ACH program, where we automatically take the money out of your account. Either on the 1st of the month or the 15th of the month. And you can't miss 2 consecutive payments. And we try to rule with a little bit of an iron fist, but because we're holding their hands from the beginning of this process, we get to know our customers. And in knowing those customers, I want them to feel comfortable to call up and say, not that I want it to be a habit, but I had one call up and say, hey, it's Christmas coming up. Do you think I could just kind of postpone it for 30 days? Hey, you're a great client. You haven't missed the payment yet. No problem. We want to work with you. And the same thing, if you miss a payment, I'm going to slap you on the hand and say, come on, let's not let this happen again.
Yeah.
Once they sign that digital agreement, we wire the funds to the seller. And then we get the title process through the Department of Motor Vehicle, and we're done. We put them in. We're done. We put them into our software package for loan servicing, and we're done. And so, the one distinct advantage, and it's important for your clients, your fan base to know this, is the difference that what we do. Every loan, every deal comes with a loan guarantee. And the loan guarantee can be with the park owner, can be with the mobile home dealer, can be with the investor, the flipper. We have people out of the woodwork that say, I'll sign the loan guarantee. And what the loan guarantee is, it says, hey, investor, let's say that it's a 10-year deal, $45,000, 15% interest, and it's going to be $800 a month for 10 years. Okay. The loan guarantee says, hey, investor, my investor in my database who comes up with that $45,000, I'm going to pay him, let's say, 11% interest. Okay. I'm getting 15%. I'm going to pay him 11% interest.
Right.
Okay. What the loan guarantee says is, hey, investor, if this borrower ever defaults, I'll take over the loan. Now,
Mm.
when I tell people this, they're like, what are you, crazy? Why would somebody want to do that? Well,
Right.
for a park owner, let's take that example. What happens with a park owner is there's other companies, 21st is one of them, that they'll lend money to the borrower and probably a better deal than what we're going to offer them, but they
Mhm.
won't end up offering them because they're subprime. But let's say that they did offer the borrower. If the borrower defaults, they have a public auction.
Yeah.
Highest bidder is going to win that mobile home.
Yeah.
If the highest bidder lives outside the park, they're going to pay for transportation to have that mobile home leave the park to their final destination.
Yeah.
And there's a picture of the park owner with tears coming down his eyes because he just lost that asset, and now
Yep.
he's got to go and look somewhere else to fill
Mhm.
that spot. And what
Mhm.
we do behind the scenes is when we contact the park owner in this case, because the park owner is the loan guarantor, and we say, look, we've been working with this borrower. Not only have they missed 2 consecutive payments, but consistently they're doing this, 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 this.
Yeah.
So, according to the agreement you signed, you have 30 days to get this borrower to become current with us. If you
Mhm.
can do it,
Mhm.
great. If you can't, the spotlight's on you. And what the
Mhm.
park owner is going to do, he's going to evict the borrower,
Yep.
he's going to refurbish the unit, and he
Mhm.
gets to resell the unit again.
Yep.
So the park owner's happy because he gets to resell the unit and he'll make a
Mhm.
profit again. The
Yep.
investor's happy. Now, what we do behind the scenes is we say park owner, and whether it's a park owner, a mobile home dealer, or a flipper, we say,
Yeah.
listen, you have 2 choices here. We say, okay, at the time the borrower paid for 2 years, it was $45,000. So right now you would owe us $40,000. You could wire
Mhm.
us a check for $40,000. We in turn will transfer the title back to you, and you get to sell the unit, and
Yeah.
you'll make a profit. That's option number one. Option number two, hey, guarantor, continue paying what the borrower was paying. He was paying $800 a month.
Mhm.
Continue paying $800 a month. You can pay $800 a month while you're evicting, refurbishing, and reselling. And let's say after 2 months, you come to me and you say, Sherman, I just sold the unit again. I have a brand new borrower for you. I sold it for $50,000. Let's catch up what I owe you. Well, it
Mhm.
was $45,000, but you paid 2 months in a row, so that's 1,600. Let's subtract 1,600 from that.
Right.
So we then settle up based on the 50,000, whatever his list price that he got,
Right. Right.
and we settle up. The park owner's happy, and the investor's happy. We gave the opportunity. I will say I've done about 150 deals in about 3 years. Out of those 150, I've had 5 defaults.
Oh, wow.
I don't call them defaults because all 5 of them, 4 of them, the park owner, the park, 3 of them were park owners, and they wired me back the funds.
Okay.
One of them was a flipper. He wired me back the funds, and the
Wow.
other one was a park owner, and he's paying $675 a month for the last year.
Wow. I think there's so many like just key things in here, especially as an investor, that option to have the option, because honestly, like you said, that's not an option elsewhere, right? And I think to have that option, because you could even consider other strategies opposed to just resell, for refurbishing it and reselling it. At that point, you have a loan in place, right? At a, if you're saying however much, 800, 600, $700 a month, whatever it may be, and you have the ability to rent it and make even some cash flow, 200,
Absolutely.
$300 a month on that, if you're able to, get a good tenant in there.
Yep.
Right. So you can keep that loan going, rent it out, get some cash flow, or like you said, again, be able to resell it again. Even maybe some seller finance options in there for a tenant who's looking to purchase, and you can create a seller finance option. And speaking of seller finance, I think just what you're offering in general is really, 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 just awesome and useful right now, particularly because you're finding a lot of mobile home buyers when you have a property listed or available for sale, all asking, do you do seller finance? Is there seller finance? Do you do, like, that's just like they're just coming straight out the gate,
Of
right? Because
course.
they may not have the straight cash to pay, $20,000 or whatever it may be, $30,000 cash. Um, so this opens up a door because most of those people are asking seller finance because they don't have access to going to a more traditional, bank that or lender that offers offer financing for those who have, better credit scores and such. So this is really like, you found a gap, right? Of a huge need and a really great opportunity, and you're really, really filling that gap. So just kudos to you for
Thank you.
for seeing that gap and taking the challenge on, because like I said, particularly now and as we're going into this need for affordable housing in different situations, I think this is key. So now we can say, well, no, maybe I don't offer seller financing, but hey, we have KeyHole Connects that can may be able to provide you with a loan that you can actually get and do it that way.
And one of the unique things is I mentioned in going in a park community that 10% minimum down payment. On
Yeah.
private property, we ask for 25%. And the reason we ask for 25% is because in a park community, there's a park manager. And
Yeah.
that park manager oversees what's going on with the asset.
Mm.
When you're going on a private property, we want more skin in the game from the buyer. So there's a sense of, wow, I had to put 25% down. I really want to take care of this property.
Yeah.
The other thing that we take pride on is, unlike a large company, we'll listen to ideas. We had, for instance, going into private property, the down payment I think was supposed to be, let's say, $20,000. Maybe let's say it was $15,000, and the investor came back to us and said, my client can't afford $15,000; they can only afford $10,000 as a down payment. And I said, okay, why don't you go back to them and see whether they can put $10,000 down. And then for the next 2 years, in addition to the monthly payment that they'll make, I just took $5,000 and I just divided it by 24. And that's how they can make up the additional $5,000 of that down payment, just by making an additional payment. And it worked.
Yeah.
So we want to hear those ideas. I'm definitely not the smartest guy in the room. I look forward to the flippers and other people that can come to me and say, hey, what about this? You think we could do this? Hey, would you be open to trying this? And I'm certainly open to those opportunities. And
Great.
like you were saying, there is so much opportunity. I purposely, with my company, we're going very, very slow. We're on Facebook, but we're purposely going slow. Right now, we have more demand than we can meet.
Yeah. And I wanted to ask you about that. I wanted to ask what are you seeing, from behind the scenes in terms of, the mobile home industry and the demand of people wanting these homes what are you seeing?
Crazy. With the second mortgages that I did, these were second mortgages that were originated in the year 2000, and we were buying them in 2018, 19, 20. There's a limit to how many of these mortgages were out there. Okay. Yes, we were making a lot of money returns for our investors. However, with this mobile home, it's endless. Endless. I'm only dealing in about 8 states right now with very little marketing, because I need to get funding and find more funding from other companies so that I could sleep at night and say, okay, I've got enough money that I can now start marketing, that I can now
Yeah.
start introducing and going into other states. You know,
Yeah.
North Carolina, we might have maybe 7 clients. There's a
Mm.
mobile home dealer, there's you, and there's a couple flippers, and
Yeah.
I think a couple parks. With zero marketing. Thank God it's word of mouth. But
Wow.
I'm telling you, for those investors out there, it's crazy.
Yeah.
The
Yeah.
opportunity is there. The only thing that I say to the flippers is that we will only finance your clients.
Hmm.
Okay, which means if a flipper comes to me and says, Sherman, I want to buy a mobile home for $10,000. Can you finance me? No, we can't finance that. My investors won't let me. Okay, I need $5,000 to put up to make this a beautiful unit. Will you cover that? No, we can't. But
Hmm.
what we can do is when you're all done, and you can say and advertise that we do seller financing, we're here for you. So that
Yeah.
person, that client that you sell it to, and you explain to them, look, 10% down in a park, 25% on private property. And I got the greatest guy in the world working with me as my partner, KeyHole Connect. They're going to hold your hand throughout the whole process.
Yeah. And do you guys have any do you do like um just in terms of trying to find the value of the mobile home?
Great question. I say no for 2 reasons. The first reason is, I'm sorry to say it, I've never met an appraiser who really, if we're doing regular homes, that we're buying homes through a
Yeah.
traditional Chase Bank or whatever, the appraisers have the tools and they have the
Hmm.
inventory that they can realistically give an appraisal. I
Yeah.
find it very difficult to do that with mobile homes. That's number one.
Right.
Number two, which what makes it unique, if a park owner comes to me and says, I have a deal for $50,000. He's my appraiser. He just told me
Right.
it's for $50,000. Well,
Right.
park owner, if you're signing that loan guarantee with me, and if that borrower defaults, you're on the hook for $50,000. We're partners. Same thing
Hmm.
with flippers. I have flippers. If the park owner, most park owners will sign the loan guarantee, but if some don't want to sign the loan guarantee, I have flippers both in the state and out of the state that come and say, hey, if any park owner says they don't want to sign the loan guarantee, let me know. I'll sign that loan guarantee, because there's
Hmm.
your instant access to inventory right there
Yeah. Wow.
with no money down. It's just if it happens, you're number one in line.
Yeah. Right. Right. Okay. And in terms of just the 2 last things I want to know in terms of like I know you said that the investors, the way for them to leverage your products is by their buyers essentially. Is there any other way for whether it's a flipper or someone who's looking to buy and hold, whatever it may be, a park manager, to leverage your products at all?
Besides,
Or
go ahead.
or because this kind of ties into my other point. You mentioned there being a need for there's a higher demand essentially right now than you could even like handle, right? Which is a good thing, always great. So in terms of maybe even investors who are maybe looking to add additional stream of income, where they can maybe potentially become a private investor with Keyhole Connect.
Correct. That's great. Thank you for bringing that up.
Yes.
It's always the opportunity. And
Mhm.
just like I described for you, the key players from the borrower to the seller to the investor,
Mhm.
we want to be fair to all of them. So let's say that a flipper is having trouble finding
Mhm.
inventory. Well, email us, give me a call. Hey, I'm in Atlanta and I'm having trouble finding. Well, let's try to connect you with maybe one of my other clients.
Mhm.
Let's try to connect you as a guarantor, a loan guarantee guarantor, because
Mhm.
we do have other loans, other units that haven't been signed off by a guarantor.
Mhm.
Or, hey, with that $25,000 that you were holding on to try to flip, why don't you be a private investor and earn 10 to 12%
Yeah.
with a loan guarantee? Or
Right.
maybe you'll be the person that's being the loan guarantor. So
Mhm.
all I can tell you is that this has been such a great experience for me. I've met so many nice people, yourself included, obviously.
Thank
And
you.
I'm here to tell you there's just so much opportunity. It's
Yeah.
just as creative as you want to get. Um, like I said, I'm terrible with the financing with numbers and stuff like that. One of the things we're looking for, and I'm hoping with the funding, is somebody could come to me and say, hey, instead of doing it as straight amortization at
Mhm.
15 or 16%, did you ever think about maybe giving the borrower the opportunity of maybe it's an interest only loan for 2 years, which brings
Mm.
it down for the borrower for
Interesting.
2 years. And then if they've proven themselves for 2 years, you can then get them on a regular loan, amortizing over X number of years. So there's so many different ways to skin the cat.
Yeah.
And for me, it's important not to take advantage of anybody. And
Right.
there's just way too many opportunities out there for everybody. And that's really my excitement and enthusiasm that you bring to the table that I want to pass on to your folks.
I love it. I love it. I love it. Well, this has been great. I mean, honestly, again, this is a key, keyhole, right? A key
That's it.
part of
That's why we did
of
it.
the whole entire thing is getting that financing and being able to offer additional solutions to our buyers, who may be looking for, different ways and means of purchasing. And like you said, a lot of these people, this is their first time at ownership, at equity, so it's a big deal for them, and just being able to provide all the options we can to make sure we get it done for them is awesome. And it also helps us as the investors of knowing, that we have those options, and we can help the buyers get this thing done.
Absolutely.
Ultimately is awesome. And again, I love the option of being the guarantor, so I can, if I can resell this a couple times, hey, why not, right?
Absolutely, absolutely. Or hold
Uh,
on to it and rent it, like you said, and
exactly,
just get
exactly.
another one and rent it, and before you know
Yeah.
it, it's Jasmine City.
Right, right. I love that. I love that. But Sherman, this has been really good. Again, this is a key part that a lot of people need help with. So again, I've seen your name. I've gotten messages from different affiliates of yours, and I was like, so happy that you reached out, and we were able to get this done. I want to make sure, guys, if you want to connect, let me get this up here. If you want to connect, I want you guys to be able to connect with Sherman here. This is his contact information. So if you are a flipper or a dealer, a park manager, anyone who's looking for financing options with mobile homes for your buyers, make sure you get this information and reach out to him. And also, like he shared again, if you have some additional capital laying around that you want to put to use as an investor and get a return on your money, becoming the bank, right? And
Yeah,
yeah, reach out to him as well, and you guys can have a discussion and see how you all can make this work. Sherman, thank you so much.
my pleasure. It was a lot of fun. It went by super fast
I
too.
know, I know. It's like, oh my goodness. So we already got comments. People are like, this is gold.
Love it,
I
love it,
love it. We got some hearts.
love it. Well,
I
feel
love
free.
it.
Anybody out there, feel free to just pick up the phone and
Yes.
dial this number if you have any questions, or shoot me an email. I'd love to meet everybody out there.
Yes, yes, we definitely are going to do that. We're going to stay tuned, you guys, for sure. I'm going to be utilizing Sherman for sure.
Absolutely.
So yeah, I'm excited about it. And again, I just thank you. So guys, if you're watching the replay, which a bunch of you guys are going to be, feel free to drop any questions inside of under the video in the comments, and you can, tag Sherman or whatever so he can help answer your questions. But again, you can just reach directly out to him. You saw his email and contact information. And I mean, he's on Facebook too. So, feel free to send a request or follow their page. And yes, thank you, Sherman. Any parting words you may have for us?
I don't want to sound like a broken record, but it's I haven't met one person since I've been doing this, honestly, that I turn to somebody, one of my partners or whatever, associates, and say, everyone's just been so nice, so generous with their time, so respectful. It's just a great opportunity. And everyone does have a sense, as much as we're all in it to make money, all the, at least that I've seen, have kept that respectfulness of, I'm also want to be good to somebody and give them an opportunity. And I think that's important also.
Yes. Yeah, I agree. I totally agree with you. Like a lot of people that I speak with that are in this space, like really, really, really want to provide, especially that affordable housing. And this is somebody's first, like you said, first opportunity to equity. So, yeah, I agree with that. I totally agree with that. Well, again, guys, thank you all for tuning in to Mobile Home Mondays with our special guest today. Again, great information. Feel free to rewind, replay, and rewatch to get as much as you can out of this. And don't forget, again, guys, we have our 2-day 100K mobile home boot camp coming up. So if you haven't already, get your ticket. It's 99% off. Okay, so get it now. You don't want to miss it, guys. Talk to you all later, and you guys have a great evening.
Thank you so much.
Absolutely.
Bye, everybody.